Okay, so today I will be talking about the S&P 500. So the ticker symbol for the S&P 500 futures is actually /ES. The ETF version is SPY, SPY. So as you can see, I have the 50, 100, 200-day moving average as well as the 60-day moving average with the Hall ribbon. This is the March 2020 crash. As you can see, we have made all-time highs since. Okay. So if you just scroll out a little bit and look at the monthly chart, it looks a little bit parabolic. Scrolling out even further, if we look at every quarter, going to max available, so you can see the trend is starting from 1985. Trend is usually around this range, right? Going back and forth, back and forth, back and forth, and around 2012 maybe we kind of diverged from this trend, this ideal trend. So you can see we double topped and we also fell, double bottomed, and this essentially was our breakout zone here. And ever since this breakout, we have been just going up and up and up and up. Now, looking at our situation now, especially with inflation and rates involving the Fed, they may be forced to raise rates as a result of inflation. And if you zoom in a little bit, right, I was taught that nothing ever really goes one straight line up, nor does anything go one straight line down, right? So I am not here to say that it will go down like that. More so a slow decline, just as a slow uptrend should be what we are supposed to. But it's just been going up like crazy. In no way am I saying that the market is going to crash again. But if you take a look closer, you can see that the S&P kind of trades around or at this Hall ribbon. So you can see it bounced once, twice, 3, 4 times, right? It traded under, but quickly, made its way back up. And at this point where we are right now, with a high of 4,249, it's pretty far from this Hall ribbon, and usually pullbacks need to happen. Momentum is definitely there. The momentum is there. We have been riding the momentum since 2015, going into 2021, and as you can see, it's clearly overextended. Now, if you zoom in a little bit, and if you just imagine the Hall ribbon extending, we can see that there is an identifiable target of possibly 3,500, just to round it up, as a possible bounce target. Now, that is just roughly about 20% move, which is doable, absolutely doable for the S&P 500. Now, these are just my thoughts here. So invest carefully. And this year, the market is very different. It picks and chooses certain stocks, certain winners, and certain losers. Not every stock moves with the S&P, so of course, if we do fall back to 3,500, not every stock will go back down to its pre-3,500 S&P level. So I was always taught this saying also, support turned into resistance and resistance turned into support. Now, those are one of the things that reinforce the trading session. So with this area marked out 3,500-ish, we can see that it was huge resistance at first. We broke out, and that turning into support would make the market even stronger. Now it could be 3,500 or 3,400 roughly. This is pre-COVID levels. So we kind of consolidated around there, and eventually we broke out. So resistance turning into support would be ideal in this situation. So you can see there were a lot of bulls and bears fighting over here, and you can tell the bears gave up. Eventually we broke out with a couple of mini dips, and here we are. Now that scenario that I was describing, being the S&P at 3,500, around 3,500, 3,400, that is more long term. And so if we take a look at the short term, we can see that the S&P on the daily chart is above the Hull ribbon, indicating that there's momentum. As you can see here, above, there's a couple of good days, below, not so much. And once we broke above it, we made a new high. And so, looking closer, we can see here we flagged, ripped, flag again, rip, flag again, rip, and we could very well possibly flag again. But using the 6-day moving average, we can see that it isn't too overextended. Short term, it is not. The S&P 500 is not overextended. Not too much. Overextended will typically look like this when the S&P 500 is overextended. A good example would be if we take a look at here, for example. So you can see the S&P 500 is pretty far, the closing price is pretty far away from the 6-day moving average. So as a result, pull back a little bit and a little bit under, above, right? The S&P closed up below a 6-day moving average, and so the very next day it shot right back up, right? So 6-day moving average is what I use to predict short-term, very short-term movement. And in the short term, I think that we see a little bit higher, possibly a target of maybe 4,270 almost. That is a very possible target. And if we briefly just look at the NASDAQ, we can see that it could very well be on its way to all-time highs. It not being too far as well. You can see it kind of topped here, had a little resistance around 4,064, and so a little mini sell-off, and we're back to where we kind of started. So it's just something to keep in mind here. I maybe put in a couple of hedges, but looking long term, it is very hard to say that we are going to go. The risk. So what I'm trying to say is the risk to reward here is not looking too good if you were to the long side, right? But the risk to reward to the downside is a lot greater. So you can see this is definitely overextended, as it is just too far away from the Hull ribbon indicator. And so when it's below, it bounces right back up, and so on. So there's not really much to say as to what the situation is now, and all I can say is only time will tell. And I'm pretty sure that the S&P will bounce around 3,500, maybe 3,400. And so that's where the whole ribbon is. So just to keep the video short, that's my long and short-term prediction of the S&P 500. Please do not take this as investment advice, as I am not a financial advisor. These are just my opinions and personal thoughts. So thank you for watching, and stay tuned for more if you'd like.